So again, thank you so much to the Franchise India team to be able to do this and creating this standard, which I think nobody has been able to do till now. And of course, Fran Global. So I think just to before I bring in the brand today, I know everyone is keen to hear about the brand. Let me sort of introduce myself and people here on the platform and also the brand. So I'm Venus Pirak, as Bharat mentioned, and I have the privilege to lead Fran Global as an organization. Fran Global is Asia's largest international market entry franchise company. We dedicatedly, exclusively work with international brands and help them enter new markets, predominantly India, Middle East, certain parts of Asia, through master franchise, area franchise, different models of franchising and licensing. And we have been doing this for, I think, over 2 decades now, would have been instrumental in bringing over 200 international brands to our country. And talking about, there's no two ways that in international franchising, F&B, of course, has a majority of market share, but fitness franchising has always has had a very big share in the mature markets, but of course, it is now really becoming a very interesting play in a market like India. Of course, our markets are not as developed, as mature in the fitness, especially fitness category, like in Australia or like America, but the opportunity is enormous. And fitness franchising really fits the bill when it comes to, franchising pro business. It's a consumption-led business. It is a business which requires your customers to come to your location, which of course right now is such a big factor. F&B brands and quick service and fast casual are really facing this challenge where how they interact and engage with their customers. But in fitness business, that is not an issue because your consumer actually is coming to your location. So you have the option of giving them maybe an entry level service subscription, but also increasing it by giving them personal training and many other things. So this is a business which of course, what I would say has some perception of commoditization, but you can always, make it special, just by servicing your clients. So and unlike, let's say, a commodity oriented business and fitness business, and I actually, right before this meeting, I was talking to my colleague Nikita, who is going to present financials. The average margin in fitness business is still upwards of 20%. Now that's a big chunk of business, and this is after paying all your rentals and royalties. So this is a very, and again, another thing which is it's a neighborhood business, just like a preschool, schools, salons, all these businesses. Why they are so successful in franchising in our country? Because you can put them in a neighborhood. Yes, fitness business requires a much larger area, requires a much larger capital. That, yes, that challenge is going to be there, but every neighborhood, just like many other businesses, is going to have 4 to 5 businesses. So I think there's a huge opportunity, and people who are already running businesses in their own specific areas, I think adding a fitness portfolio, if you have the aptitude for capital plus service, it can be a very interesting. And the way Plus Fitness is it's a global brand out of Australia, very mature market, 200 plus stores. But they have actually crossed the biggest challenge which generally brands have in India, which is proofing their model in our country. They're already running over 8 to 10 stores in the western part of the country, and from last, I think, 6 to 7 years. So the model has been able to be modulated with regards to Indian marketplace. And now what we are looking for is ambitious, aggressive, credible area developers across different parts of the country. So we'll share all those details during the session. But fitness business is right for people who understand uh, real estate capital plus service. You have a real opportunity to create valuation for yourself and, of course, your investors. And we are looking for people in different parts, especially in South and North. So on that note, today we have Gordon, we have Stephen, and we have John joining in from Plus Fitness, who will share, of course, their journey into the brand, and of course talk a bit about how India has treated them, and of course, what we are looking forward from the country. We also have my colleague Nikita, who is going to share the financials, and my colleague Sriraj, who actually heads our brand servicing business and will be helping us throughout the session and afterwards it. So it's a live session, people. Share your remarks, feedback, question and answers in the chat box or Q&A box. And I look forward to interacting with you. So welcome, Plus Fitness team, and look forward to hear from you.
Thank you, Venus. And hello and good morning, everybody. Very happy to be here, and thank you for allowing us the time and taking time out of your day to listen in to what we're about to share and talk about as well. As Venus says, yes, that's a huge opportunity in fitness, and I totally agree that the capital and service component is a real key driver. So in terms of who I am, I'll say a little bit on the screen. Gordon, I'm the franchising director for Plus Fitness in Australia, so I look after Plus Fitness globally. And then on the call with me today, I've got Stephen Stucci, who heads up our development of the business, and then John Miller as well, who is our head of marketing for the brand. So he really brings the excitement to life and brings the energy to the team as well. So I'm just going to share my screen if that's okay, and I'll take you through a 5 to 10 minute rough presentation of an outline of who we are and what we offer and everything else about us. You can now see that screen there. So in terms of Plus Fitness, I think first and foremost, it's probably critical for us to tell you who we are and where we came from. So Plus Fitness as a company, as a brand, is part of a bigger organization called Viva Leisure. And you can see on the screen there, we've got multiple brands, and some of them are also international brands as well that we own and that we operate. And currently we're operating over 402 locations in Australia and throughout the world. Now, the other part that's really critical to understand about Viva Leisure is that we are ASX listed, so we're part of the Australian Stock Exchange. So we've got a lot of capital behind us, and that allows us to really play in the development space and develop our brands significantly well. But it also allows us to play in the technology space, and that's the thing that's different from, I suppose, Plus Fitness and Viva Leisure to the other players in the market. Is we build a lot of our own tech and design our own payment gateways, access door system, control systems. So what we build is proprietary software that allows us to create our own USP, our unique selling points, to our customers, and allows us to engage with our customers better and really interact with the club team and simplify what we do. So I suppose fundamentally it allows us to work smarter rather than harder. So in terms of Viva, where we sit in Australia, we're the second largest health club organisation in Australia at the moment, number one being Anytime Fitness, which is the global leader, and you've got Anytime Fitness in India, so I'm assuming most of you will probably have heard of that name before, if not maybe a member or already trained. So hopefully one day you become a member of Plus Fitness instead. But we're a big player, lots of brands, lots of opportunities. But specifically on Plus Fitness as an overview, for you, as I said, Viva owns, as Venus already said, we're across 200 plus locations in Australia, also in New Zealand, and then also in India. We currently have 8 clubs in India, and that's growing, and I'll touch a little bit on that in due course. We've got over 200,000 members, and income-wise, as a brand, well and truly over $100 million worth of revenue in an annual turnover basis, and also multi-award winning from an Australian basis, but now also on starting to become on a global basis as well. We were part of the Global Franchise Awards finalists last year. We didn't win, but being sitting there as a finalist in amongst some of these really big players and long-term historical players as well was a proud moment for us. A bit closer to home and on Plus Fitness, it's a simple, low-staff model business, and often that becomes the challenge in a lot of business about finding the right people and making sure they're doing the right things, and you're reliant on people doing things. We've built this brand so we're not reliant on people, but we actually allow the brand to work better with the people. So the technology we've brought in, and I'll explain a bit more about this in the coming slides, actually empowers our team to do what they're here for and what we want them to do. So that's where the technology plays a lot of difference. As an owner, you understand what you need to pay because we're fixed franchise fees. We don't have the variable fees or percentage based. It's a flat fee royalty system that we work on as well, which is better for you as an owner. Simple, fast break evens. Obviously, it depends on your performance levels on a local level. However, the return on investment break even in Australia, we're seeing 6 to 8 months time return on investment within 1.5 to 2.5 years, depending on those markets. And we've got a fully supported team that can really dig in, and all the team are experts within the industry as well. Consumer offering, like many of the other franchised fitness brands around the globe, 24/7 access, reciprocal access across all our clubs. We'll provide complimentary fitness assessments, programming. We've got the member app, the member ID access control systems. Clubs can offer classes as well to engage with the members more so, and obviously personal training is available. Personal training is really for us a secondary source of revenue, and therefore it's just drives profitability for the franchise owner, whilst also driving length of stay and length of lifetime or size of lifetime value of our membership base as well. In terms of low staffing, it's a very simple system. You have 1 or 2 team members, a manager, supervisor, or you might just have a manager in reception, somebody doing sales, and then you'd have your personal trainer, fitness instructor. Typically, they pay rent to be there. So again, that's your source of revenue, and then they will charge their clients on there. And low staffed hours, some in the morning, some in the afternoon, and that's based around the peak usage times. So we're there in the clubs when our members are there, rather than staffing the club when the members aren't coming in. How we do that? Really simple. We've just got a full access control system. We use now the mobile phone, so it's going through the Apple Wallet or the Google Pay system. So we can access the clubs there. Then we've got the full security and monitoring system, and obviously the duress system as well. Fundamentally, for peace of mind for our members, they've got the AED in case there's an emergency situation, and they've got their personal duress alarms as well. So if it's late at night or they're concerned, they can carry the personal duress alarms around the club with them, and if anything they were concerned, then they can raise the alarm that way as well. So it just gives added comfort to people. Not that they get used, but it's added comfort for our consumer. So a bit more high level growth at a glance. Last year, we saw our prices, our membership prices, our members pay us on average an extra $1.25 per week. Now, when you put that into the scale of the business, that equated to last year $9 million extra in revenue for our franchise partners, and that was 100% going to them. Because we were on a fixed fee, as they put their fees up, the franchisee makes more money. We don't. So our job is to help the franchisee help you grow your business and become more profitable. And with that, we get a longer term, more satisfied franchisee who stays with us and may or may not want to do more clubs. But fundamentally, driving profitability of our clubs is what we do. And that's why we understand that metric significant. As a brand, we're growing, and we've got 43 new territories around the planet secured and ready to open. 21 are already in the pipeline and development schedule. And last year, something we do a lot of is training for our team members. We educated over 350 people. in the last half of last year in face-to-face educational programs to help them run their business better and understand how to do it. So again, that goes back to the systems that we run and also the support we provide to make sure our people, that when they're in the business, are doing the right things at the right time. Where are we today? So in Australia, 193,000 members. In India, we've got just over 6,500 members. So it's actually quite phenomenal to see that whilst the average member per club in Australia is at 991, and yes, India is slightly lower, that's actually seriously impressive. Because in Australia, if you're not fully aware, we have the luxury of selling memberships that sell by direct debit, and therefore the ongoing. So unless the member decides to cancel the membership and stop the payment at the bank, their membership will go on forever and ever. In India, it's payment in full, and therefore it's a fixed term agreement. And when the 12 months has been sold, that person has to come back into the club and resell. So there's no forgetting. Unfortunately, in India, that's just the world that it is within India. But it just shows you the power of the brand and the power of the team at the moment with keeping the numbers that high is phenomenal, especially when we're talking about break evens. Forgive me, I'm not sure about the India exact break even, but in Australia, it's 400 to 450 members. So India will probably be similar level, but that's a really impressive number for India, and we're seeing that grow as well. The averages are pulled down because the last club to open that opened 6 months ago is still to grow through its full growth period. So that's got a slightly lower member number. And 8 plus 2, I'm not testing you on maths here or whatever else. We've got 8 clubs open in India at the moment. We've got 2 more coming, one in November, one in January. And there's actually 3 others in the pipeline as well, but they're not fully secured. So we haven't added them to this slideshow for you. So by middle of next year, we should be somewhere in the region of 13 clubs in India, in India West, in around the Mumbai area. So how do we do this? Well, first and foremost, our members, typically more male orientated, 67% to the 33% female breakdown. And that's typical of the industry we're in because we're the 24/7 health club style. So that's comfortable for us. We're starting to see more females grow. Just if you're wanting to know some detail there, we're starting to see more females join our gym and grow as our membership bases grow as well. So how do we do this? We focus on our 4 key pillars: marketing, operations, people, technology. Really simple. We don't overcomplicate this business. We like to keep things simple because simple works and works well. When we just look at the 3 key pillars, and this is where we really lean into our proprietary technology and the ability to lean into the broader power of Viva Leisure, because our technology really enhances our operation and our marketing enhances all the people coming into the operation as well. So these really are intertwined. And the technology really allows us to have everything connected. So our central point of our technology is called what we call the hub, and that empowers our people. So whether we look at it from a retention perspective of the technology we use to automate retention and keep members engaged, keep members using your clubs, to how we find and attract new members, everything comes into the central point, which is the proprietary software of Viva Leisure, which is called the hub. And all our clubs are now using this hub in Australia and New Zealand, and we're starting to really see the markets there. So the hub will be introduced to yourselves within India as well. So earlier on, it was interesting that Venus talked about capital side of the understanding and the service side of the understanding as well, because we look at things slightly different to other companies. And that's because we ask the question, what is our most important business metric? And for us, that's our member relationship. That's about us really connecting with our member, And when we say the member relationship, what we mean is developing a sense of belonging. It's really helping our members and understanding who they are to help them achieve the healthy life that they're looking for as an individual. So it's not, plus we've got 800 odd members in our clubs in India, and we've got 900 odd in Australia. They're all individuals. They've all got their own story, and we're working to empower people to understand what those stories are, so that we can really create a connected membership base and drive that sense of belonging. So it's saying we just need to care. We need to care about the health of our people and take time to help the member succeed, but also take time to understand who they are and how we can help them, because everybody who comes to the club comes for a different reason. So with that in mind, when we go back to our four pillars, I talked about the technology, the operations, and the marketing. Fundamentally, that drives and allows our people to do what our people need to do, and it's about getting our people to do the right things at the right time in the right way. And it really is that's how we drive this business. And if we look at it on an even more simplistic basis, and through time as you get to know me, you'll understand that I like to keep things simple. But this is what we talk about all the time. Our job in support office, and our job at Plus Fitness, and your job as a franchisee or a master franchisor, is to drive ROI. But we also talk about ROEI, return on emotional investment, because you're buying a job, but you're also buying an emotional customer service orientated business. So we're looking for people who really do understand people and get people. And then to make a successful business, all you need to do in its nutshell every day of this business is do something that helps you find a member or retain a member, or find your new club or retain your club. And that's the four key buckets that we work in on a daily basis from a support office perspective. And we also work with the franchisees to keep them focused on those things, because that fundamentally drives the return on investment. But as we talk about, the return on emotional investment, because that's fundamentally what you're buying into. So you're not just buying this for a job or buying this because necessarily you think you'll make money. Whilst yes, you will, and yes, we want you to, there's the emotional side of it as well, that we want you to get that return on that emotional investment. So that's really where we sit, and we sit different to other people in the fitness industry and the fitness market. So that's probably taken a little bit more time than I may or may not have been allowed, but there you go. Thank you.
This was very well done, Gordon. I think the meaningful presentation you have done, and I think the concept of ROI and ROEI. I think that is such a well put concept, because we are a capital and real estate oriented business. But if you do not attach it with servicing the members and retaining the members and upselling the members, then you do not have a business. So I think, and I think your experience in India, of course, is going to drive the next leg of growth, which we, of course, are working on together. So this was a very meaningful presentation. I think just from a standpoint, if before my colleague Nikita kind of puts in and gives some hard numbers to people here, what has been your experience with regards to your, understanding of the Indian market? Do you find any differentiation? Are there any common points, or this was a complete sort of a new market development and awareness for you?
For me, on a personal level, it's brand new. I've not had the opportunity to spend a lot of time in India at all, and the market, but working with our partners in India, it's been interesting actually, because whilst there's the cultural nuances, the building nuances, a lot of things actually are the same. And I suppose fundamentally it comes back down to it's still about an experiential business. We're
Yeah.
delivering the customer experience, the customer wants, and how people get fit or stay healthy is still the same. Fundamentally, we might like to do it slightly differently, And that's our ability that we can tailor our model accordingly to meet the size and shape of the available spaces from a real estate perspective. But we
Yes.
still know we need to put in the quality equipment to connect with people on a human perspective. And we all went through the COVID piece, and unfortunately for our partners in India, they literally got up and running, and then COVID hit, and they got
I know.
significantly stopped by that. But now what we're seeing and everywhere is this significant return to the fitness industry where people want to be in getting, yes, fit and healthier. I think that's becoming bigger and bigger, and it's a growing market space. But people want to do that back in a gym or a health club as opposed to being at home or being segregated, where we seem to be leaning back into this, the experiential component in and around other people.
Absolutely. No, I think that's very well put. I think my colleague Nikita can share now some numbers. What we are, how this is going to look like from an investment standpoint, business standpoint, and I think then, Swaraj, we can then eventually take questions.
Sure.
Sure. Thank you, Venus. So just a minute, let me share my screen. So hi everyone who is joining the webinar, since I think Gordon has already taken us through the entire profile in terms of the brand, how they already are present and would like to expand into the Indian market. So I'll give you an overview as in what kind of franchisee projections that we propose for a particular franchisee. So the area that we might require, because we are going into an express model, should be somewhere between 4,000 to 6,000 square feet, when an ideally a 750 to 1,000 member base is what a partner can easily achieve, since we already have the success story for the brand in India. Now, the investment that you'll have to make will be close to 3 CR as a total project cost, which is roughly around 560,000 Australian dollars. The setup cost would be roughly around 2,000 rupees per square feet. What you would see, the gym equipment, which will be the brand list that that Plus Fitness is going to provide for, will be roughly between 3,000 to 3,500 rupees per square feet, and any other fixtures around the center could be another 500 rupees per square feet. Royalty, as Gordon just told us, that it will be a fixed monthly royalty of 55,000, or which is roughly around 1,000 Australian dollars, is what we are going to charge from the franchisees. And the non-refundable franchise fee that you pay as a first-time charge will be close to 20 lakh rupees, which is roughly around 36,000 Australian dollars. Since this is a franchise-owned and a franchise-operated model that we want to propose, so the unit franchisees will be catering to all the operational expenses, the rentals, the salaries, marketing expenses, and all the other expenses that are part of the tenure. Now, if I'll give you a little overview on the revenue assumption. So we will be selling out these annual, half-yearly, and quarterly memberships, which we have just drawn here. That annual could be 35,000, half-yearly is roughly around 20,000, and quarterly around 12,000. Since a prominent part of the revenue cycle for Plus Fitness also comes through your personal trainings, so that will be a part of the revenue cycle for you. The assumptions that we have taken is roughly around 800 member base for a particular 500 square feet center, where on an average 35 to 40 lakh rupees as a monthly revenue is what you can collect, which makes us close to 4.5 CR as an annual revenue, where your annualized ROI, if you talk about a period of 10 years, could be around 70% year on year, which gives you a payback on your initial investment in a period of 2 years. Also, if I'll draw your attention on the OPEX that we have assumed, so the revenue share with the trainers in terms of the personal trainings revenue will be close to 35%. So any revenue coming from the personal training, 65% stays with the franchise partner, and 35% is what you share with the personal trainers. The staff cost could be close to 7 to 8%, which includes your incentives on sale and the entire staff cost. Rentals could be close to 18 to 20%, basis what kind of property or area that we want to allocate for. Administrative expenses and utility expenses could be another 4 to 5%, and the local marketing expense borne by the franchise partner would be 3%. This is an entire model for a unit franchisee, since we are as a whole looking for these master franchisees or an area developer franchise. So a total rollout of 25 units is what we can easily expect from these partner, where at least one unit the master franchisee should open themselves, and another 24 to 25 units is what they can sub franchise. This license for an area developer, the partner will take at a cost of 1 CR as a master franchisee, and any other cost that is borne by setting up their own direct unit. So roughly around 4 CR is what the partner can expect investing into the venture, where the share of sub-franchisee fee with the brand is 50%, and the royalty that you share with the brand on sub-franchisee units will be 50%. And the payback on your investment would come in a period of 2 years. So these are the two models that we want to propose for the Indian markets.
Thank you, Nikita, for taking up the financials along with the investors who are there on the call. There are some questions which has come in, Gordon, which I would request your support if you could clarify it. So Amar Seth has a question that what is the difference between a member and a club? Can you clarify further? I think.
Sorry, just to clarify, the difference between a member and a club, or?
I think this is not relevant so much. So Akash from our Bombay team has asked that where do you have the existing centers in India?
They're all in around the India West region, so in around Mumbai, and forgive my geography here, but
Mumbai, you're there, right?
yeah,
Mumbai and Ahmedabad.
Mumbai
We are
and
there.
Ahmedabad. Yes, thank
Okay,
you.
Akash. So they're there in Mumbai and Ahmedabad. Those are the two questions which we had. So Venus from
I
you.
have one question. Nikita, do you have some sense with regards to different areas which we are looking for between North and South? I think that might be useful for people to share.
I have to check. That might not be readily available with me. Let me just check on that.
Because 25 stores is not only for a region like North India. North India would be maybe having 3 different spots for these 25 store each areas. Right? So I think just to give you a sense, the model which is being made is to have area master franchises. We want, because of the experience of the brand in India, I think they feel confident to work with people who can lead one specific area. So let's say Delhi NCR, this is where we are right now. So we're looking, so Delhi NCR would be one area where a 25 store deal with an overall investment of about 4 crores. I think this is an unmatched offer. Rest, you have Punjab, you have rest of Haryana, you have those cities. So that again would be a 25 store cluster. Same thing in the south between Bangalore, between Hyderabad, between Chennai, and maybe some parts of Kerala. You would have about 3 or different clusters of 25 each. So that's the kind of distribution we are looking for. Depending upon where you are, I think you can put that in the chat box as well, which cities you're from, and accordingly we will make this deal for you. But I have to give it to Plus Fitness team, Nikita, Sviraj, and my team here, is to like we've made the model very simple. Generally, I think it's very hard to get a deal where you can start franchising after the first store, but hey, you can. If you compare apples to apple with the fitness model, this is a very capital light model because you're becoming a master franchise. But yes, as Gordon mentioned, capital is, yes, it is required, but if you do not have that service aspect in you, you would never make money in this business. This is a very service-oriented business, and that's where it is required. So,
Venus,
Steve,
sorry to interrupt you. I have the sheet. Do you want me to just
please, I think that'll be
I-
helpful because, see, everyone comes from different areas, no?
So when we talk about the scope of expansion, so these are the clusters that we have formed. Largely where the NCR and Greater Mumbai, I think, makes our best focus. Then could be a cluster of Andhra Pradesh and Telangana. Tamil Nadu and Puducherry could be one cluster. Rajasthan and Gujarat we have accommodated for one. Rest of Maharashtra and Goa would be one cluster. Then your Tri-City, Punjab, Haryana, this we have considered as one cluster. Uttar Pradesh and Uttarakhand as a single cluster. Madhya Pradesh and Chhattisgarh, your West Bengal and Northeast would become one entire cluster. Karnataka and Kerala would be another, and Bihar, Jharkhand, and Odisha would be another. So we have categorized as in broadly 12 clusters for a 25-unit scope.
Correct. And Gordon, these would be 10-year contracts. So we are looking at these let's say area development like how does that work? Because people would have that question.
Yes, so that's the agreements are 10-year agreements, and then with an option on renewal as well.
Great. So I think what I would say, and Nikita, you can, and Swaraj, you can come back and question me, is right now, if you really see from a global brand standpoint in the fitness business, we have Fitness First, which is part of Cult Fitness. Of course, they are playing in the premium segment. They are not, as far as I know, they're not sub-franchising. Second is, of course, now Cult Fitness has also acquired because of COVID Gold Fitness, Gold gym business. Uh, I think they're trying to kind of really now come back and they're doing sort of they're opening stores. And then I think the most I would say scaled global brand in fitness right now is Anytime Fitness. And we do as a team we do sell those franchises quite a bit. Is there anyone else I'm missing? Because then I think Plus Fitness really can come as that option, which I think right now currently is missing in our market, and we are giving this opportunity to people, especially like dividing this across different area. Is you can actually become the top two brands or three brands in fitness in your region, in your area, and really scale it very quickly because that's how the model is made. Nikita, Swaraj, you want to comment on that? I think, is there that fourth one, the brand I'm missing?
I
No, no,
think
no, I
these
think
are largely the
these are
national
the last
brands.
two
There
brands.
are different brands, but those become regional and have a very, I think,
International brands. I'm not talking
no,
domestic.
no, in the national one, no, these
International
are, I
brands,
think, the
nothing, yeah.
most prominent ones.
So I think there's a huge opportunity. And I think one thing we should rely on is that the brand already has almost 900 members per club in the 8 clubs they are already running. So there's already a business model which is there. But yes, you do need to have access to capital, access to real estate, access to be able to attract talent, build training facilities. I think you need that. Then I guess it's an interesting business. It's a high margin business. Remember, it's not a variable royalty. There, I think the brand is very transparent. And again, I have to give this to Gordon Plus Fitness team. And I know it comes with the experience that having a fixed royalty, even though it is maybe lesser than what you would get in a typical scenario, I think it kind of really gives everyone a comfort that okay, this is the minimum that you have to pay, and there will be an upside if the partner is making more sales. So I think that is
Correct.
also very interesting. And
And
any
Venus, I think,
Raj?
yeah. Yeah, Venus, I think the most important part is that, see, our biggest challenge when it comes to servicing a brand is that the proof of concept. And both these brands are available in the most prominent cities where we are looking forward for expansion. So my Bombay team and my Ahmedabad team, along with my consultants who are there on the call, I think this is a great opportunity where you can definitely get in touch with me and Venus, and we get you to visit the investors with the location which is present out there, and it can be a great opportunity and immediate closure because brand does not have to the investors have to go out of the country to the city where they are and go and visit it. I think that's a great positive approach which we have for this brand.
Also, Gordon, Stephen, can I declare that you will be here with us at the end of November? So I think there is an opportunity for, in case the discussions go well with us, Plus Fitness team would actually be in person here. to join at our Mumbai exhibition at the end of November. So I think reach out to Swaraj. He can speak to you and talk to you. And if it all makes sense, we would put together your profile and share it with Plus Fitness team. And if it all makes sense, you actually can meet them in person. Gordon, am I right?
Yes, absolutely. We will be there. We're just finalising our travel plans at the moment, flights in and out, and we're actually coming for an extended stay because we're going to meet all of our individual franchisees while we're in country as well. So we'll get to meet all of the Plus Fitness existing franchisees, but we'll be at the show for the 2 days, definitely.
Absolutely. Stephen, anything you want to add?
It's just, I think the most important thing is our proven model. It has been proven in India now, in the Western region, and I believe our master franchise will be at Expo as well. So our prospective franchisees will be able to talk to him as well. So the proof of concept is growing in terms of our model in Western region. We're at 10 now, and we're moving towards 13. So yeah, so it'll be exciting to be part of that team in Mumbai.
Absolutely. No, and we look forward to see you here, Sviraj and Nikita, and John for sure. Anything before we go?
No, thanks.
Nikita?
I think we are good to go, and we are looking forward, I think, to launch the brand as soon as possible. So, yeah.
Okay. So I think what I would want to say before we go and I give it back to Bharat is I think one thing, and I've been in this industry for 18 years now. One thing which changes and which makes a lot of difference is access. I think I've seen our economy growing from the 90s till now. I think what is really is changing that the access. Right now, I think, and that's what the consumption story is about. Right now, our access to good fitness is very limited in our country. Very limited, I have to say. And I think that's where the opportunity for a prospective franchisee is. You do research in your area, and you really just compare the access of hair salon against a fitness center. It is so skewed, and that's where the opportunity is. It's the access, and if you are able to bring that access to consumers, I mean, consumers are not an issue. Demand is not an issue in our country. Yes, the business modeling economy, like making that economic model is important, which Plus Fitness has already done, but also giving that access. Then I think consumers in this kind of business, like a salon business, once you have that hairdresser, once you have that person who does your hair, you're not going anywhere. So it's the same thing. If you are able to maintain your service standards, this is a business where consumer is going to stay with you for a certain period of time. And yes, if you want to invest in a fitness business like this, consider the access. What is the current access? And then see it how it would be in 5 years. And that's the story. That's the story you want to build for yourself. That's the story the brand is building for itself. And reach out to us. We would love to have a chat with you. Thank you so much for
Thank
everyone's
you.
time. I'm looking forward that to meet Plus Fitness team when they are here later in the year, and would love to have a chat if you want to acquire a franchise business. You have our details, and good luck. I will give this back to Bharat.
All right, thanks so much. For today, I'd like to thank all the viewers for joining this webinar and putting all your queries forward. These webinars are done just for you so that you can take an informed decision, choosing the best opportunity available. We would also like to appreciate all the panelists for being available for this webinar and sharing the brand details along with the business opportunity for the viewers. Gordon and Steve, thank you so much. We really appreciate you for the presentation. Also, Swaraj and Venus and Nikita for being available and explaining things to the viewers. To the viewers, in case if you want to have a one-on-one discussion with the brand, please call our hotline number 9717683838, or you can write to us at feedback@franchiseindia.in. We will again come up with a new brand and we'll explore another opportunity the day after tomorrow at 12 o'clock in the afternoon. Till then, take care and have a nice day. Thanks so much, everyone, for joining.
Thank you, Bharat.
Thank you. Bye-bye. Take care.
Thank you, everyone.
Thank you.
Thank you.